What's up, guys? Kevin Cage here with another crypto update. Let's kick it off. So first up, shared by Good Morning Crypto, we have the CEO, Graham Rodford. Now, I believe he is the CEO for Archax. So Archax is that huge organization that is helping Aberdeen tokenize their multi-billion-dollar funds on top of Hedera. And here we have Aberdeen on their website mentioning Archax and Hedera. Now, Aberdeen is on Hedera's governing council, and total assets under management is well over 500 billion. So Archax, or at least how I pronounce it, is the largest external shareholder in the UK's first regulated digital securities exchange, allowing institutional investors to access blockchain-based digital assets and act as a bridge to the traditional capital markets. So we have this clip of the CEO of Archax speaking at Ripple Swell event in 2023. Take this with a grain of salt, but these are the people in the industry sharing these numbers.
The total market is 1.4 quadrillion, everything that's ever out there. And if you start looking across any of those asset classes, they're all starting to move on-chain already. And the ease with which we've seen people interested in money market fund, tokenized treasuries, and those types of instruments, the support for stablecoins, when you're talking about replacing cash, when I see DTCC, Euroclear, Clearstream, it only takes one of them to flip onto natively digital, and that's trillions of assets on its own that move. So, tens of trillions, I think we could see. And bearing in mind it's 1.4 quadrillion, this is still a tiny slice of a huge market. 30 to 50 trillion, all on XRP, all trading on Archax.
Here we go, $50 trillion. 2 years from now, Ripple, Twitter will replay the session.
So I know we're tired of hearing these numbers, but these are some of the big projections. We've gone over the tokenization stats for real-world assets, and even global blockchain technology and the market size, enterprise adoption, DePIN, and only seeing it will we actually believe it. And just like in 2018, 2019, 2020, if you talked about the crypto asset class reaching trillions of dollars in market cap, you'd be laughed at. If you talked about Bitcoin creating another all-time price passing 20K, you were laughed at. And timing the market is the hardest part. We know these markets are cyclical. All the big moves, the volume flows in this asset class each cycle. So we absolutely have the potential with the S&P 500, the Dow, the NASDAQ 100, gold, all hitting an all-time price. Now, do we see some capital flow from the equities market, the commodities market to come into the crypto asset class? I think it's just a matter of time. Also, for API 3, we can see we're getting a nice pump from the cycle low around 80 cents thus far, up about 390%, so 4.9x. And I'm just sharing because we officially did close the weekly fair value gap, so up here, all the way back from April of 2022. So API 3 is looking great. It looks like it's following Chainlink to some degree. Friendly reminder, this is the weekly chart. This is not the 30-minute chart. So API 3 has been building throughout this bear market. When they first launched at the end of December, Bitcoin is already pushing into all-time highs. And their ecosystem and number of data feeds is only growing. And thus far, we're seeing Bitcoin draw a very strong retracement from its cycle low, approaching the 702. We've had alts like API 3, Chainlink surpass the 236. AVAX reached the 236. Solana, I believe, went much higher. Ethereum, XRP wicked the 382 last year, but it came back down. And then we have a bunch of alts like this, Energy Web token, near their cycle lows. Yet to draw any strong retracement like we've already seen some projects do. We're at the phase where we're not just seeing interest growing for blockchain and tokenization, we're actually seeing live application today. The Monetary Authority of Singapore, think the Central Bank of Singapore, the first time a major bank had tokenized deposits on a public blockchain. And this brought together DBS Bank, JP Morgan, and SBI Digital Asset Holdings, conducting foreign exchange and government bond transactions on Polygon. We know the tokenization estimates of 10% of global GDP by 2030. That alone will likely be over 10 trillion, and even the carbon credit market. So I know a lot of people scoff at this use case, but because of all of these ESG regulations, a lot of these organizations are going to be adopting similar technologies. So it's definitely a big narrative to keep tabs on. We know HSBC working with Medico, which is Ripple's company. We know Citibank and piloting of Citi Token Services. The service uses blockchain and smart contract technology to deliver digital asset solutions for institutional clients. Real estate and startups like Proppy introducing NFT real estate transactions, and even stablecoins like Home that we've discussed before. And even the future of decentralized finance estimated to reach $600 billion by 2032. Pioneering compliance for decentralized finance to be the biggest breakthrough of 2024. So there are huge benefits for DeFi, but they also introduce the potential for regulatory arbitrage. In other words, the lack of standardization across jurisdictions means participants could take advantage of more favorable laws in one region to circumvent less favorable regulations elsewhere. So we know DeFi has a huge value add and will play a role in the future, but like it or not, it's going to be regulated to some degree, especially with DIDs or decentralized identifiers and verified credentials and all of this connected to blockchain. Increased data sharing between jurisdictions becomes pivotal, fostering transparency and standardization while empowering regulators to understand the risks of the technology and develop progressive regulation. Well, it looks like many other jurisdictions are already taking this seriously, so fingers crossed that the US steps up. Alright, next up for Casper, so I want to play this clip of the COO Ross McKay discussing Casper Labs and their software as a service business model for track and trace and AI governance. I'm still catching up with a bunch in my personal life, and I did bite off more than I can chew, so I am juggling a few things while also doing 75 hard, so I completed that last year, all 75 days, and then I did phase 1 for another 30 days, and now, since it's been a year for 75 hard, I'm kicking off and doing another 75 days. So I know back in 2020 I was able to do maybe 1 video a day, sometimes 2, but right now I just don't have the time. I can't sit online all day. Between reports, managing an algorithm, and then add 75 hard into that with 2 workouts a day, a gallon of water a day, reading, counting macros. But I need it because if I don't have a hard set of rules, I lose my discipline and I get lazy. So it's absolutely necessary for me. I need to lose the bear market belly and get back to the bull run body. So we talked about the track and trace solution on Casper Network in the past. Here's a few slides, and you guys can follow Rect Vojak on Twitter. He posts a bunch of great information. This is a huge use case for enterprises, but one of the most important components is that the technology can easily fit and integrate into the existing tech stack. No matter how amazing your solution is, if it doesn't easily integrate into databases and ERPs, it can't really be used at scale for enterprises. So we're going to play this 10-minute clip. I wouldn't play all 10 minutes unless I thought it had great information from Ross McKay over at Casper Labs.
One of our focuses in Casper Labs from a go-to-market standpoint. So I'm responsible for our go-to-market. One of our focuses is going to market with our AI product and our track and trace product. And so as part of that, we're out there engaging with prospective customers who are dealing with one of these 2 strategic imperatives. And I think that you're well aware of both, but just to summarize, on the AI side, we're building a product in partnership with IBM that's going to provide governance and insight and analytics around their AI solutions within the enterprise. And then on the track and trace side, it's a track and trace solution that where there's a couple of use cases that are at the very forefront. One is around helping companies, again, with the strategic imperative of their carbon emissions tracking, reporting, and how that features in their net zero plans, which almost all large companies across certainly Europe and the US are building and having to manage. And the second part of track and trace, which is our adjacent use case, is around the real world tokenization of assets and tracking those through the value chain and the supply chain. And so our focus from a go-to-market standpoint is really out there engaging with customers, engaging with companies, again, across primarily Europe and the US, and looking to develop projects and build projects with different companies in different sectors. Supply chains are extremely complex, and not only are they historically complex, because especially for large companies where they can have thousands of partners upstream from them in the supply chain, it's even more complex today because there's a shift. And there's a shift for a number of reasons. Number one is that there's the deglobalization that's happening as a result of different geopolitical tensions between, for example, the US and China, or many of the Western countries and Russia. And so at one point, supply chains were really focused on just optimizing for 2 factors. Where can I get a product as quickly and as cheaply as possible? And so that time and cost were really the only 2 dimensions that big companies were optimizing on. But what has really become apparent more recently is that they're having to consider other factors such as resiliency and even security. And when you follow some of the things that are going on in the Red Sea and the shipping channels through there, you get a perfect example of that. And so all of this is leading to disruption in supply chain and companies refactoring and readjusting those supply chains. And as part of that, so that's the reality they're facing. But as part of that, there's also increasing pressure from both consumers, regulators, and even some of their customers and partners to ensure that they've got clarity around their impact on the environment, their impact on climate change. And that's why, again, for almost all large companies, they've either built a net zero plan or they're in the process of building net zero plans. The problem with net zero is that there are different forms of emissions, scope 1, 2, and 3, And the most complex ones to really get transparency into is scope 3, because that's not just internal operations, that's everything upstream and downstream of a company. And that's where you touch on those complex supply chains. And this is precisely where the likes of blockchain holds, or blockchain-enabled solutions hold so much promise, because it can finally give you that real-time transparency into a very complex multi-party system, which is what the supply chains have. And so that's the real premise of the solution, is actually giving that transparency, of course, so that you can track goods and assets as they move through the supply chain, but also in the context of net zero and climate change, so that you can understand the impact of that in terms of carbon emissions, and of course, how that features into large companies' net zero plans. And so when we were recently, for example, in Davos, that you would hear from leaders, not only that it's critical for them to manage and retransform supply chains, but secondly is that they have a net zero plan, but very often they don't have the visibility that they need to really operationalize that and execute on it. And that's where the transparency of scope 3 emissions are so critical. And then beyond that, they still lack often the real-time visibility through supply chains that are necessary. And as there's two factors, I think, that are changing the likelihood that these supply chain solutions will be truly transformative, because blockchain-based supply chain solutions have been spoken about now for 5, 6, 7 years, and some have been attempted. But I think that there's two big factors that are changing that will help this. One is that the increasing digitization of supply chains. So most industries have digitized significantly, but actually supply chains remain and have remained they've remained very manual compared to many other industries and many other value chains. But I think that there's change happening there. One is just there's a gradual change as companies are adopting more digital technologies. But the second is, as companies are looking to use AI to say optimize supply chains, because they can do it far better than legacy systems, that's only possible when you've got the right data, the training data and training sets to then train your models on. That is only possible when you've got digitization at the core. So I think that's one driving factor that's happening. And then the second driving factor is that IoT held a lot of promise within supply chains to offer real-time visibility and a stream of data around a variety of use cases we can touch on. But the IoT for many years has held much promise, but it's actually been far too expensive. And so both the devices, the hardware sensors, and the connectivity plans were far too expensive to make the business case work for large companies. But there's increasing and accelerating commoditization of those hardware sensor prices. So sensor prices have come down by about 75% in the last 20 years alone. And connectivity is not going down as rapidly as that, but is also going down. And as they go lower and lower to the point where it might cost cents on the dollar for you to get these sensors, the business case of embedding IoT across your supply chain network through your partners and so forth becomes much more compelling. And I think up until now, the business case involving IoT was quite challenging. And so I think the combination of digitization, in part to drive AI, and the commoditization of IoT sensors and connectivity, both of those are providing the perfect transformation to then for blockchain-enabled solutions to be far more viable and far more compelling than they were before. Similarly, when you were in Davos, almost every panel session, whether it was about regulation or technology or company or even climate or company transference, almost everything was referring to AI. The challenge, of course, is that AI is an incredibly powerful technology, and companies are concerned about the risk that it may hold. So they're convinced about the use cases and the business case, but they're also concerned about the potential risk. So addressing that risk is going to be critical for companies. And at the heart of that risk is when they are building AI solutions and those models, how are they governing the data? How can they ensure that the data that they're training from isn't leading to biases in the model, isn't leading to adverse outcomes, isn't leading to drift over time where a model that was once trusted is no longer trusted. And so actually having transparency around the data sets and then the outputs of those AI models is going to be critical. And so that's the scene that we are actually, and the problem that we're looking to address alongside IBM. And so what we're building is an AI governance and insight and analytics platform that will help companies have transparency around, again, where their data set comes from, and then particularly where data sets are multi-party. So where they come from public and private sources, where they come from different organizations, and where it's very challenging today to track the provenance and to have true transparency into where those data come from. And that's, again, where a blockchain-enabled solution can be incredibly powerful. And so at its heart, it's really about providing a level of transparency and control and reduced risk around AI models than is possible today. So both track and trace and AI, we're thinking about those as enterprise software solutions. So you can think of them as SaaS type pricing. Now, of course, the shape of that pricing is yet to be defined. So it could be license-based, it could be transaction-based or volume-based. And we will be flexible in working with clients around their needs around that, but it will be like a SaaS type pricing model for enterprise software. So that's number one. And then in terms of the selling of it, is that the intention is, so we have a beta program using AI as an example right now. We have a beta program that's open and live and free to join. And people have already joined that. We've had a huge interest in it. And that including like SMBs, mid-market companies, but also enterprise. And with those enterprise companies, they will, from the early stages, be able to test and use the product. They'll be able to shape product design, and we'll be able to shape the product around their requirements and their needs. And of course, the intention is that the people involved in that beta program can then become reference customers, and then of course can become hopefully enduring long-term customers of Casper Labs and that solution in partnership with IBM.
So that was a bunch of information. Back in 2017, I was stupid thinking that we're going right to the moon during a bull run because I experienced prices going up. You throw a dart at the board, you get a 3, 5, 10x return. But the points that Ross made in this clip are huge. So explaining with supply chain, we haven't had all these enterprises actually or properly digitize their supply chain. And not even just the supply chain, that's just an example of tracking inventory, but just the entire enterprise itself in terms of digitalization. How organized is this data? How organized are these data sets? Are they serialized? How well are they tracked? So we made a great point. As enterprises are digitizing their supply chains, digitizing any assets that they hold even outside of supply chain, outside of inventory. As this data is digitized and also better organized with, serialization, with these types of solutions finally in place, this allows blockchain to actually do its job and provide its value add. So better, digitization actually enables blockchain. Now we know cloud was just a cost savings play, but for blockchain or DLT, this actually allows cost savings and revenue generating opportunities. So let's see, in past videos we talked about the Facebook or Meta integration. We've covered watsonx a bunch in IBM's cloud using Casper Network for AI governance. We've talked about Nucleus Finance. We talked about staking in the wallet, the multi-sig feature. And IPWE still has its shot at restructuring and still deploying on Casper, but time will tell. Over the past couple years, we talked about Casper's tokenomics in detail, explaining transfers cost 0.1 Casper, delegating and undelegating your stake is 2.5 Casper. And then regarding WASM deploys, it could vary. I've seen 1 Casper, 2 Casper, 6 Casper. It just depends on how complex it is. And in theory, if it was a very complex deployment, it would require a bunch of Casper. So I got a question in the YouTube comments the other day asking about Casper and how the tokenomics and utility of the network works. So hopefully they're watching this video. So we're just going to discuss the current model because the new model is going to be different with Condor. I know a lot of people on Twitter say Casper's not needed, and that is pure BS. To do transactions on Casper 2.0, which is known as Condor, you need Casper. And we'll discuss the new model in detail as soon as they put out the post and calculators so we have estimates to go off of and, try to ballpark and do a decent video covering that. So for Casper, a typical transfer costs 0.1 Casper, delegating, undelegating costs 2.5 Casper, and then WASM deploys like smart contracts and utility. Could be 1 Casper, 2 Casper, 6 Casper, 50 Casper. It really just depends on how complex it is. So what I personally believe is that utility is going to be driving adoption in the highest number of transactions. So sure, transfer, delegating, undelegating, that can cost some Casper, and that Casper then goes to the validator. But enterprises having tons of transactions on a daily basis, smart contracts, the logic, if and then, and triggering these events every time a transaction is needed likely requires a lot of Casper. So we played that clip with Ross highlighting the track and trace solution. That is not just supply chain, that can be tokenization of assets for the entire enterprise. So basically, the more transactions there are, that equals more demand for Casper that's in circulation. And the Casper used in those transaction fees are then rewarded to the validator. Now, could the validator sell their Casper and just dump it? Yes, in theory. But what's more likely is the validator keeps it in their stake bonded, so it's actually reduced from the circulating supply and added to the stake bonded, where we have 67% of the total supply being staked. So that means the more Casper used in transactions, ideally WASM deploys, those actually go to the validator and then added to stake bonded. So we see the circulating supply of Casper that's unlocked over 95% of the total, but of the total, 67% is locked up. So we'd actually take this number and subtract 8.3 billion from that number for the true circulating supply, or better said, is the true liquid supply of Casper. So more transactions can lead to eventual scarcity, and as supply is reduced, demand is increased. It's just Econ 101, and this in theory can drive prices when there are more buyers than sellers. And this is a similar concept for most assets and networks with utility tokens, even though they might have a different type of fee structure and a different type of potential flywheel effect. And same thing with Condor or Casper 2.0 becoming gasless, there's a method to the madness. The entire Casper network needs Casper to function, so the Casper tokens are going to be required to be held and then locked up to even transact on the network. So I'm excited to see the detailed blog posts and then the calculators and estimators, but bottom line, more transactions the better. And the thing about investor sentiment specifically on Twitter is based off price. So since Casper's price hasn't popped up or done a strong retracement, the Condor announcing that it's gasless is FUD. So now we have people that have been in crypto for 1 or 2 years, they've never read the white paper, they've never gone through the docs of Casper, they've never actually done their own research besides maybe watching a video, and those are the majority of people that I see on Twitter complaining about Condor, saying that it's not going to need Casper, which is just false. But I guarantee if they made this Condor announcement when Casper was at 20 cents, 30 cents, everybody would be happy, but because prices are down and market sentiment is low for a variety of assets, but fear, uncertainty, and doubt are also at higher levels the longer that prices stay low. And Casper's not the only asset sitting at its lows, there are a variety still at their lows. But alright guys, we'll call it a day. Huge thank you to all that hit the like button and subscribe, and I'll catch you in the next one. If you enjoyed this video, I'd greatly appreciate if you could hit the like button, let me know your thoughts down below, and my link tree is linked in the top of this YouTube video description, with all links, crypto resources, and discounts. I'll catch you in the next one.